Hello and welcome to the Ascendo Traders Group, where our motto is developing effective video technical analysis trading plans on a daily basis. And our website is blog.ascendotraders.com. Again, blog.ascendotraders.com. So this video that you're watching today is all about one of the most important mottos in traders in the stock market that there is, and that is, the trend is your friend. The trend is your friend, of course, until that trend is over. And many of you might feel the way we feel in this little cartoon here, where especially our October 2007 folks, that we had a lovely uptrend for a long time there, about 5 years or so. And once the trend broke, many people did not recognize it, maybe thought the market was going to go up forever, and a lot of our 401ks have gone over. So in other words, a good trade may be good today, but if the trend's over, tomorrow it's a bad trade. And the trend, as we'll get into more specific, a trend can be on different time frames, and it can be a great trend on a daily, bad trend on the monthly, horrible trend on the yearly, but a super trade on the 5-minute. So trends are time frame specific. But what is a trend? And basically, a trend exists when the price moves up and down. But however, it's not specifically a up and down within the same price range. So as we look at our example here, we can see that the price is moving up and down, but it's moved within the same range. And as we break out of that range and start entering new price ranges, this is a trend. We're trending out of the range and making a new trend. Obviously, with an uptrend, the bulls come in and they try to make their impact felt by pushing the price up by buying, where the reverse is true with a downtrend, where the bears come in and make their impact felt by selling and forcing the price down. Well, why is it important to know what a trend is? Why is trend is your friend one of the most common stock market slogans that you'll come across? Well, first and foremost, it helps you determine a long-term direction. Now again, the trend can be measured on multiple time frames, but understanding where that stock is heading based upon that time frame is very important. It also helps you identify support and resistance. And if it helps you identify support and resistance, that might also help you with your entry and exit points. Again, depending on what type of trade you are, short-term, day trading, long-term, that trend and understanding support and resistance defined by the trend can help you make your entry and exit decision. Likewise, because we have different types of trends, it can help you identify breakout points, again helping us with our entry and exit points. And one thing that's also important, trend, if you understand the trend, if we're in an uptrend, your timing may be wrong. You may get in at the wrong point, but if your trend is intact, you can kind of cover up the mistake, because in the long run it may take longer to get to your price point, your target, but you're still in the trend, and so that's fine. However, if you guess wrong on the trend, it usually means doesn't matter what the timing is as far as your entry, you're probably going to lose money. So as we said earlier, there are different types of trends. The first one is a primary trend, and that is when a stock breaks out and heads in a direction. That is a primary trend. It often occurs as a long-term trend. We think of our primary trend as the longest time frame, the longest term, the longest direction. However, within that primary trend, we may have secondary trends. We may have intermediate trends that are occurring at the same time. For example, when we look at our little up and down parabolic curve here, you can say we're in a nice uptrend here. But the price rarely just goes in a nice smooth up. Usually, as you can see, this blue line, the price is going up and down, and up. So the primary trend is this green line going up, and then we have intermediate trends, secondary trends, the blue line, that are happening inside of that long-term trend. Again, going back to the slide before, if your timing is wrong and you enter a trade here, that's okay, because we're in an uptrend and the stock may pull back on you, and that's a whole other video on stops. But as we continue to move up, you're fine. However, if you guess the trend wrong and I'm buying here as an uptrend, then no matter if I buy it here, wherever I buy it, because the stock is now moving down, even though it's at the top of the curve here, the timing is wrong. Timing is okay because it looks like we're getting ready to make a new high, but the trend is wrong, and therefore I'm going to lose money. So let's take out some charts and take a look at the trend. As we begin to look at some charts, I want to point out that we're going to do this as a two-part video series. So in this video, as you've already seen, we've been talking about generalities. What is a trend? How can we use a trend? Now we're going to look about drawing some trend lines. And then in the next video, we're going to talk about using trends, especially for our futures traders, our day traders, how we can confirm trend, how we can use trend as entry and exit points, all of that. But right now we're going to continue on with drawing it. Now with drawing trend lines, there are the purists out there that believe wick to wick, candle body to candle body. I'm a whatever makes sense type of guy. So I'm going to come down here to the March lows on the YM Dow E-mini futures and click. And I'm just going to bring it up. And as you can see, I went with the wick in March, but I'm going to kind of mess with the candle bodies there in June and bring it up here. So this to me makes sense because we got touches. When you want to draw your line so that you're touching from one low to the next higher low, and you can see we have a nice primary trend, at least as far as this chart is concerned. Nice primary trend from the March lows, and you can see we touched it here, touched it here. This is also what the 50 moving average is involved here, which can be used for trend. And you can kind of see we're coming down to it here also. And then we have a intermediate trend. Remember the secondary trends? So if I take my my price trend line and draw something like this here, you can see we had a downtrend within the primary uptrend. And what's important about that, when we draw this line here, is what? When we broke this downtrend, what happened? We took off. So you'll see some people's charts where they have lines upon lines upon lines. It gets a little confusing. But what's important is to not only get focused on one time frame. This is why I said trend lines are on multiple time frames. And you always got to take the time to look at the bigger view. And so even in this 6-month time frame where we have a nice primary uptrend and we have this secondary trend and there's more within here, there's even another trend to be aware of. I'm switching over to my telechart charts, and you can kind of see I already have my trend line from the March lows drawn. But as I shrink the screen, and you can see there it is, still there, still there. Ah, very nice, very nice. But as I keep shrinking, you start to notice, hey, what is this line going here? And I'm going to keep shrinking it a little bit more, a little bit more. And you can see right here, this is the October 2007. Touched it again right here. And again, where are we right now? You can kind of see we have two trend lines meeting. Now, originally I said this was our primary trend from the March lows, but we have a long-term trend from October 2007 that we are now battling against, forming a wedge or a triangle, and we have to determine which way we're going to break out. And you can kind of see how I have lines all over the place. Again, identifying that support and resistance and knowing whether or not it's a good place to get in or get out, or how we use trend lines. And so we can see that the Dow Jones is coming into a little wedge here, and it'll be interesting to see which way it breaks out. So we're going to review real quick what we've covered so far. The main thing with drawing your trend lines is to analyze the patterns of high and low prices, and then draw a trend line connecting those recent lows or highs. You can see in our example here, our downtrend line is connecting the recent highs. We also are connecting the recent lows, and the reverse is true in an uptrend. You can do wick to wick, body to body. Again, I just like to do what makes sense and see if you can get continuous touching price points on your trend line. We do have a free offer for you. If you go to our website, we have a free day trading ebook, which really will help you with developing your pre and post market routines. And we also have a futures day trading plan that you might consider purchasing. Again, both of these items can be found at our blog.asinotreasure.com. And remember, on part 2 of our videos on how to identify trends, we're now going to look at using the trends to help us with our entry and exit points.